What is up every morning? Everybody this morning. I guess every morning. We pretty much say what is up every morning, but that's just me trying to cover my faux pas. Let's see. Let's start with YouTube. Bitcoin Candy, Scott Hill, Scorpion, Pete Kelly, Jimmy James, Patsy Green, Bobby Kazemi. What's up, Bobby? And Tom, what's going on? From the East Coast in the house. Over on Clubhouse, we got myself, we got Alexander, Antonio, Catherine, Franklin, Mono, Hoda, Ryan, Michaela, Lil Gaines, what up? Akram, Sade, Armin, Francois, John, Hogg, Matthew, Ritus, Isabella. What's going on, everybody? And then let me say hello over on Theta. We got our peeps over on Theta. Hedrick, Girl Pilot, Scorpion, Troublemaker, Dwight Schrute, Cabeza de Termo, Stress Relief. And Jimmy James. Okay, cool. So hello to everyone. Sylvia, hello. Adam, what up? Texas Steaks. Bam. Let's see. So real quick, Bobby, on Texas Steaks, because it's a small pool, we don't always get rewards, but then when we do get rewards, they're way bigger than normal because we share in the whole stash. So it's kind of like some weeks you don't get anything and you're like, oh no. And then when you do, you get these big wins. So that's what it's still been averaging better than, because I have 3 wallets on 3 different pools, 2 of the recommended pools, 1 at Texas Steaks, and still on the average, my rewards are bigger in Texas Steaks. So there, I hope that helps. But yeah, go where you got to go, Bobby. Don't feel like you're landlocked. That's the whole thing. You can switch whenever you want. So anybody that's staking with Cardano, if you want to switch. Don't feel stressed out about it. Okay. Let me say hello to Skeptical Poo, to Nesh, Scott. What up? JJ, what's going on, JJ? All right, cool. So we'll get started today. We're going to kind of take a step backwards. We're going to talk about cognitive bias, game theory, economics. And I'm going to outline some of the problems I see in the macro sphere, because sometimes it's real easy for us to get super tunnel vision. JR80, T Cadwell, SJL Theta TV, what's going on? It's very easy for us to get super tunnel vision and forget the whole macro sphere, which is actually really important. We don't want to do that. So let me also say hi to David, Christian, JD, Kevin, Ina, Sonia. What's going on? All right. I think that's pretty much, we got the whole crew. Okay. So Brandon, what's going on? So let's go ahead and get started. This doesn't sound like a rant-filled show. Yeah, probably not a lot of ranting in this one. I've got to clean my act up because we will be broadcasting. I can't say what network, but we're all so that's happening again. We don't know when that starts. My guess is we're about a month away from going back to full-time broadcasting to the greater financial people. So we'll see what that means. Very likely the show will continue with Clubhouse, but I may have to rebroadcast those. I'll have to be live on that network, obviously. And then, so I don't know the future of the YouTube show, but we will have exposure probably after the fact. I can get those shows and then I can repost those like to Theta and maybe to YouTube, but it would be after the fact. To catch it live, you either have to catch it live or you can catch it live on Clubhouse. So that's kind of cool until the Chinese take that over and pervert it. Okay. Let's see. Michael, what's going on? All right. So we're going to talk some common sense today, common sense investing. We're going to talk about what we think are some of the problems in the traditional financial economy, the legacy system, and why it makes sense to do some of the things you're doing here. We will, of course, talk prices because we always talk prices. And I am going to give, because I don't usually give price predictions, but I think it's kind of a fun, thought experiment. So I'm going to give some predictions for June. They're not too far away, right? We're in March, April, May, June. So about a quarter away, quarter in a month. So I'm going to give some June predictions. But first, we're going to go to my made up graphics, and then we will return. I don't know how he does it. Dwight always makes me laugh. Dwight Schrute, isn't DeFi an amazing ecosystem? Commencing rant in 3, 2, 1. That's funny. Yeah, I like that. No, Mark, what's up, man? Big A&J. Yeah. Neffers, screaming monkey spunk. That's funny. CC Brown, what's going on? Okay. Let's go through prices really quick. I'm going to give some June analyses. Constantino, what's up? Chris, what's up? All right. Let's go through it in a way that's somewhat sensible. We'll try to back down all the nonsense. As you guys know, Bitcoin did get up and touch 50K yesterday for a moment. It gave a little bit back, but it had a big run. It was in the 43 range on Sunday. So kind of nice run, kind of nice rebalancing. For those of you that are curious, when the price, okay, let me explain something. A lot of people don't understand the funding rates in the futures markets. Let me explain what that is, because a lot of times I think you're reading articles, they're not giving you enough information to where you understand how much that affects how people hold. So when I was telling you guys, and maybe this is my fault too, the funding rate works like this. Let's say we're in the futures market and a bunch of people start going leverage long, meaning I believe Bitcoin's going to go up. I'm going to take on leverage on the long side, on the bullish side, on the price is going to go up side. There's the thing called a funding rate. Now that funding rate gets charged every 8 hours, 3 times a day. So when I say, oh, it's 1 basis point normally, and it got as high as 15 basis points, one might say, well, who cares? 15 basis points, that's like 0.15%. That's dust. Well, it's not dust when it's every 8 hours, right? Every 8 hours. So now it becomes almost a half point per day, right? 3 times 8, crypto trades 24/7. So you're getting charged a half point a day. So what is a little bit under a half point times 7? You start to close in on about 4%, 3.5%, 4% a week when that funding rate goes nutso, because it's compounded, right? It's 15 basis points, 15 basis points, 15 basis points over and over and over. So then you start thinking, wait a minute, if I have, thousands or hundreds of thousands of dollars going, on the long side, and there's a sufficient amount of funding rate because, you're basically covering the shorts are covering the long. It's kind of an insurance policy to keep the exchange out of trouble, right? Think of the exchange as the bookie. And they're like, if you guys are all going long, we're going to have to charge a little vig on that. So that's what's happening. So you're essentially financing the support of the exchange. Anyway, long story short. So when those funding rates get above 5 basis points, right? Or a 20th of 1 percentage point, things start getting messy. And when they get above 10 basis points, they get really messy. And when they get to 15 basis points, look out below. This is why when people were buying the dip last week with leverage, because everybody's like, oh, it's definitely going to go back up. Definitely. And so they were buying with leverage. And when the price didn't go back up, they got double nuked. They got blown up again. Leon, Pablo, what's going on? Getting money, what's going on? So this is how you can get blown up over and over. Tommy Bernard, what up? Barry Weiss, what's going on? So you can get blown up pretty quickly. And so anyway, that's the funding rate. But just remember, whatever that funding rate is in the futures market, it's every 8 hours, right? And it's against your whole bet. So if you have a $100,000 bet, expat Matt, what's up? It's the funding rate. And then 8 hours later, it's the funding rate again implied against your account. You're having to pay that over and over and over and over and over. So when you see that the funding rate gets way out of whack, it creates some issues in the futures market where people can get punished pretty quickly. And again, people are taking on tons of leverage because they're being, and this is kind of the whole point of today's show, is this time that we dial back the nonsense and people kind of reduce this back to the legacy economy. the reason there is a crypto space, other than the foresight and genius of guys like Hal Finney and Adam Back and the original triumvirate or core team, or however many people were our Satoshi or whatever, right? That original crew. The reason that we are all here is because there are problems in the financial economy, the legacy system. There are frictions that exist in that system, and we have found that in many, not all, but in many cases, the digital asset space can solve or reduce some of those frictions. And wherever you can apply a blockchain-based data structure, a lattice data structure, or some of these kind of Web3 data structures, and they can alleviate tensions or reduce stress, you have all these benefits, right? So, and it just makes sense at a certain point, once the trust is there, right? You know, you have, what is all a blockchain is basically just a few kind of, it's really kind of doing two or three things, let's say. It's creating value in some cases, okay? It's creating or verifying identity in some cases, and it presents some form of governance in some cases. And it's usually a mixture of all those, right? So you can think, you can look at these assets. Are they value-based? Are they identity-based? Are they governance-based? And do they have these features, right? And for any project to really make it, you need use, utility, and adoption, right? So along the lines, you have Bitcoin, but if you back out, if you're 10,000 feet up, it looks like it's basically just going up and to the right. It's been maintaining the chart. It's actually ahead of the Plan B chart, which is the stock to flow ratio, if you guys haven't checked it out. The price is ahead. It should have only been, I think, to maintain his price between 33 and 36,000 would be along the dot plot for following Plan B as far as the stock to flow ratio. And basically what that means is you reduce the quantity of an asset, definitively reduce the quantity of an asset, and that's through the halving, right? And you have a capped supply or a reducing supply, then you get a line that essentially goes up proportionate to the amount of the decrease in the quantity, if that kind of makes sense. If you have less of a thing and there's a constant amount of desire for that thing, then the value of that thing goes up. Constant amount of desire, shrinking supply, the value goes up. Something's got to give, right? So that's stock to flow ratio. If you guys want to check that out, I'm not going to do it as much justice as going directly to Plan B. So you can go on Twitter, Plan B. You can read all about it. There's tons of articles on it. I think he cherry-picked a lot of his data, but you know what? He's been right for like 12 years. Oh, he's so good. So you're right until you're wrong. Only he's had a pretty good track record, and he's so far had the best way of summing up what we're seeing in a way that seems somewhat reasonable. So there we go. Okay. Yeah. So Bitcoin, we're at 47.8. Okay. It's given a little bit back. It's having a little bit of a down day. Ethereum. Oh, let me do my little prediction. So I think we're going to be gummed around here, very similar to the way when Bitcoin first broke through 30, went to 42, went back to 30, and then it kind of floundered. Then all of a sudden we had some Elon news. We had some more MicroStrategy news. Pow. It went up to 58. Now it dropped back down. It got to 43. Very similar kind of sell-off. It floundered for about 2 weeks I think it will flounder this will be the second week of floundering in the mid to upper 40s. So I think probably 44, 45, up to 50, 51. And then I think we're going to see a breakout into the 60s again, well into the 60s. My guess is by June, we are over 75K. All right. That's pulled it off the blue piece of paper I found in a downtown Los Angeles urinal. That's what it says. So there we go. Okay. Let's see. We have Ethereum. Ethereum had a big move the last few days back up. It had a big move down over the weekend. So it gave up everything from 2 weeks ago, about a week and a half ago. It had touched 2,000. The fees got out of question, and like a depth charge back down. It was at one point Sunday, it was in the 1300s. It's 1523. It's still down for the day, down for the week, up for the month, up for the year. Cool. My guess is Ethereum Ethereum's tricky. Ethereum's facing a couple of threats. Margin erosion by Cardano and DOT. And probably to an extent, Cosmos, definitely near. And in the Asian markets, IOST. So that's going to be something they're going to have to sort out. I don't know how they sort that out. They're not scaling anytime soon. Optimistic roll-ups. Okay. See how that works out. So my guess is Ethereum probably tracks with Bitcoin to an extent. And most of the dumb big money will come into Ethereum, and most of the smart big money will either hedge or leave Ethereum. Probably won't leave Ethereum, but they'll hedge Ethereum with Cardano and Polkadot and go down the list and buy all the infrastructure plays, which is probably what most all of us should be doing as just a general course of action. My guess is Ethereum goes past 3,000 by June, right? So if we see a $75,000 Bitcoin, we're very likely to also see about a $3,000 Ethereum. I'm not in the Ethereum's going to 20,000 camp. That's a very small camp with a bunch of idiots that don't know how to start a campfire. Raul Pal. Okay, Cardano, it's $1.22. It's given up a little bit in the last few minutes, but it was about $1.25 earlier. It's kind of been floating around here. Listen, this makes sense. It was only a week ago, let's give it 10 days. It was only 10 days ago that Cardano got above $1 for the first time in 3 years. A lot of this was hype. A lot of this is run up. And a lot of this is excitement over all these announcements that haven't come yet. Okay. And I think that maybe Charles is trying to kind of calm everyone down a little bit, get people to quit looking at the price. And anyway, the Merry Hard Fork was a success. Everything is fine. I expect a handful over the next 2 weeks, a handful of AMAs and presentations that are wildly bullish and optimistic. Hits NDC asks, I'm considering dumping my Ethereum for near. Oh, I can't tell you that's a good idea. I can't tell you that that's what I would do. Nods his head up and down. And I'm not giving you advice. Continues to nod his head up and down. So there you go. So listen, where do we think Cardano goes? I think Cardano will probably move up when meaningful projects admit to launching on Cardano. I know this is going to irk some people. I don't consider Celsius a meaningful project. In the same way that I would not consider Nexo a meaningful project for the expansion of Cardano. In the same way that if BlockFi had some stupid governance token or any of these lending platforms, that is a small sect of the crypto space that, in my opinion, will not really exist 2 years from now. Not the way it looks right now. It will be done by banks or bigger facilities or directly through exchanges. And I don't care who you are, Celsius, BlockFi, Nexo, whatever. When Binance and Coinbase win, not if, when they say they're getting into lending, you're fucking done. All of you lending platforms will fucking cease to exist because they will overpower you. And then banks and legacy will come in, and guess what, Coinbase and Binance? You're fucking done. Because you will cease to exist as a lender when the traditional facilities come in. It is what it is. This isn't magic. They haven't given up yet. Turns out that the legacy system didn't just, fold over and say, you got us. You win. You win, crypto. You 17 people out there. You guys got us. No. Common sense. Fucking wake up, everyone. Common sense. All right. Question. Pablo asks, Nick, for the long run, do you know of any financial institution that can accept payment in digital assets or to borrow out? I've been thinking of a mix of DeFi and CeFi. Doesn't exist, does it? Well, I know that Coinbase is getting into lending. Wouldn't that be that? I know that I was listening to CZ this morning, and I know that he wants to completely decentralized Binance. So I would say that we're on the way there. We're very close to on the way there, but very close could be 18 months. Remember, things happen very fast in crypto, especially price movements. But the movement of software, the movement of code, and Constantino can definitely speak towards this. It isn't just like, hey, get that done next week, and you get your marching orders and you just push out code. It is if you're in the DeFi space. but if you're in actual platforms that you want to have some longevity, some safety, some security, some level of adult governance, it doesn't happen that way. Software takes time. Software engineers always overestimate what they can do in 1 year and underestimate what they can achieve in 5 years, right? Especially with open source, where if anybody else in the space can solve the problem, you can benefit from that. So, he said banks are collapsing. Some banks are collapsing, and I think that central banks want banks to collapse. Central banks would love to be the only banks, right? They'd love to just be the last show on earth. And who knows? They may get their wish. But unfortunately, I don't think the little man ever meaningfully competes with the big man. I think the big man usually just buys them up and wins, because at the end of the day, those of us speaking for the little man, when they dangle that check in front of our face, we're out. Everybody has a price. Everybody has a price. It might be ridiculously high, but the price exists. Stress relief. Someday the legacies can loan at 15% in the third world, then come back and sell 5% guaranteed to the rich sheep. Yeah, I agree with you. Hederick asks, what's your logical guess for Cardano's price when Coinbase lists it? $2.50 to $3 on the roof and then back under? No. This is the tricky one. So if we're doing a prediction, my predictions for Cardano are all based on meaningful, not just partnerships, because we all know partnerships in crypto don't mean dick. No, these are meaningful. Well, it's not partnerships you want. You want companies launching and using and pushing a lot of volume through Cardano. That's the thing. You don't want Ripple's got partnerships. They've got hundreds of them. They don't mean anything because no one's pushing any liquidity. That's the problem. If any of the Ripple partners meant anything, Ripple might be $8 right now, but they're all smoke and mirrors. That's the problem. So simply having partnerships doesn't mean anything. And I would say this too, to BP Brothers' point, Coinbase listings don't mean that much. A Coinbase listing, all that means is it'd be a little easier to purchase Cardano. And what? Exit the exchange? Well, guess what? You can set up an account at Kraken. You can set up an account at Bittrex, and you can purchase your Cardano, and you can exit the exchange and go park it over in Daedalus and start collecting your rewards. So the idea of the Coinbase effect to me is the 2017 thing. There isn't much of a Coinbase effect. That's kind of dead in the water. They know this. Just look at the timeline. You think it's an accident that Coinbase is exiting? I mean, oh, they're not exiting. They're just raising. No, dude, they got plenty of cash. They got plenty of liquidity. They're doing this so that their investors can exit. Okay. This is an exit for the early investors in Coinbase. If you think it's anything other than that, you're loco. All right. So yeah. And Coinbase is never going decentralized. So let's not even go down that path. Binance might, probably so that he can stay out of prison, so he can get off that boat in international water and actually go enjoy his life as a billionaire. So we'll see. So my price prediction for Cardano is meaningful alliances and people actually pushing volume, tokens that get use, utility, and adoption, not all of these scammy ass tokens that in the last 24 hours, there's like over already 300 tokens that have been launched against Cardano, but they're all bullshit. Literally all of them are absolute duck-faced dog shit coins. And it's a bunch of domain squatters and some other stupid stuff. So nothing so far. So, you know, hey, listen, now we have native assets. Great. Now you get what you get what you wish for. Now let's see. So it would not surprise me if Cardano sells off back down to about $1.05, $1.10. That would be fine. That would be fine. And then let's start building the price based on actual alliances, use, utility, and adoption of tokens that are offered. And I don't mean spammy DeFi garbage pails where you just spew liquidity in and then in come the idiots to pilfer your platform. So, and that's going to happen too, right? You're going to have some DeFi platforms with some bunk code that decide to jump on, Johnny come latelys. They'll fire off a token against Cardano, and they'll be like, look, we're on Cardano, and some asshole will get in there and exploit them with a flash loan, and they'll go, and then the news will come out, Cardano got hacked. And it won't be that. It'll be that the idiots writing junior amateur ass code and publishing it out there with the beta sticker got fucking smoked, and a bunch of people lost money, and it has nothing to do with Cardano and everything to do with shitty DeFi platforms with poor code, poor or zero governance, and just unaudited junior ass programmers. But anyway, not like I have an opinion on that. So Cardano price by June, based on this little piece of blue paper that I found in a downtown LA urinal, $2.25, $2.25. There. Bitcoin Candy asks, question, are all the coins being launched clogging or spamming? No, they're not, because the one great thing about Cardano is that it's very lightweight to do transactions. So they could launch 1 trillion tokens. It wouldn't make a difference. It's not going to clog the network. Well, maybe 1 trillion, but we'd be getting, God, that would look like a mess. Can you imagine going in dataless and you have like 400 of these like tokens, like baby, oh God. And hopefully there's a convert to Cardano button, convert to ADA, convert to ADA, convert to ADA. You could just select all of them and convert to ADA. All right. Okay. Lawrence, hey, what's going on? And Rocky, what's up, buddy? One of the birds is Babel fees. And yes, it landed, but people don't really seem to care, even though I think that's one of the biggest deals that's happened to Cardano. We did a show on it yesterday. The other bird, I think, is Ethiopia. And my guess is it will land sometime in March. I mean, they still have to get the AOK from the government. They can't really put that out there. And I know that it probably got preempted a few weeks ago. But in order for Charles to come out and say we have a deal, they need to really have a deal, right? They need to not almost have a deal or maybe have a deal or really want to have a deal. They need to have a signed deal. And when that happens, then my estimations would probably change. I would probably bump up my downtown LA bathroom urinal Cardano estimation to somewhere around $3 to $4. When you onboard 5 million people in a country, it's a fucking big deal, but we're not there yet. So my guess is that's one of the birds that hasn't landed. We'll wait and see. But that would be a big deal. That would be the biggest deal in all of crypto ever. Like literally the biggest deal. Oh, real quick, anybody that's thinking because Pomp said it, Pomp is a jackass. Listen, the fact that Twitter is doing a sale, doing a note sale, and they're trying to grab $1.3 billion. They're not doing it to buy Bitcoin, you fucking rubes. Jesus. Calm down. Everybody with laser eyes, fucking calm down. All right? Dear God, man. It's funny. Anybody does anything and everybody in Bitcoin, they're going to buy Bitcoin because they're doing what every company does when they want to expand. Come on, man. Of course, you know what? If they do, then I'll come on and say, well, you got me, Dorsey, old Dorsey. Old Dorsey wanted some more Bitcoin. They're gathering Bitcoin all the time through Square, right? They gather it all day long. They buy it through Square. It doesn't make any sense that Twitter wants to put a bunch of Bitcoin on their balance sheet. It doesn't make much sense, man. Okay. Let's keep going. So Polkadot, when we get a final date on the parachain offering, this thing rockets. I mean, rockets. There's already 350 plus companies that are going to vie for one of these spots. Now, I don't know how they meaningfully explain how these auctions work. I don't know how we're going to be delegating our tokens or any of that kind of crap or whatever that. There's a lot of game theory involved there. But I will say this. When they announce an actual date for this parachain offering, based on my little blue piece of paper, Again, not my advice, not financial advice. I'm thinking DOT goes well past 50 in the blink of an eye. Okay, XRP, they got to get through legal trouble, period. Ripple needs to get through legal trouble. When it does, this token is probably something you look at again because they do have a big company, and Ripple, sans Brad Garlic Mouth and Chris Grand Larceny, is probably a good company, right? They just need to cut out some of the cancer. Okay, XLM. The greater story, I think XLM has a very bright future, but I don't know if the price of the token has a bright future. However, if we see a Bitcoin, if my base case is that Bitcoin hits 70, 75K in June and the high tide rises, lifts all the boats, then I'm guessing both XRP and XLM push in on 65, 70 cents. But I'm a little bit worried that the whole bridge asset space is dismantling as we speak, meaning technology is passing it by. I don't think you need bridge assets anymore. I don't think you need a third currency to transmit value between two currencies, A to B, B to A. You don't need C sitting underneath, burning fees to get there. Tommy Bernard asks, is March a bad month for crypto? No, but it does get pushed as a bad month. It's a sideways month. If you're an options trader, it's a freaking great month. It's the best month. It's one of the best months ever because you get to make money every single week. It is awesome. If you're waiting for a big boom, this is a substantially different market than it was in 2017. So the history is in the last 5 years, there have been there have been 3 down months and 2 sideways months. The down months, one of them was bad. That was COVID. If you erase that, because I'm guessing that we're not going to have another COVID event here now this month. But we'll see. COVID 2 or 621 or 22, whatever. So I'm not thinking personally that the past 2017 doesn't count. That was peak retard. 2018 was the fall off of the 2017 cliff. So you can nix those 2 years. They're a wash. And 20 was COVID. To me, that's a wash. So your data set is now 1 year out of 5. That's not a data set. So what it means is we don't really have any good data on March, right? It's all just people cherry picking things in order to write their story. My guess is March is a pretty good month in terms of Bitcoin. Now, are there some tax effects that we probably have to be, cognizant of? Well, yeah. For some people, there are some tax issues that may need to be sorted out. So we'll see. Yeah, that's the way I think, Lawrence. I think bridge assets are antiquated tech. That's a good way to put it. I think that whole space doesn't exist. But I got to give you off my little blue piece of paper. XLM probably sees 65 to 70 cents. There we go. Okay, Cosmos. Cosmos is a layer 1. It's been floating between about $16 and $20. It did take a big jump. It's up 136% on the month, 415% on the year. I don't think it's had its big move yet. I think it pushes into the 30 range near Polkadot. It probably catches a bid when Polkadot catches a bid. It seems like Cardano and Polkadot lift the dApp space while Bitcoin lifts everything. Kind of interesting. Okay. Oh, kind of an intensifying sell-off for both Ethereum and the Bitcoins. Let's see. Cardano's down a little bit. So Dot's having a good day. So yeah. Okay. Cosmos, I believe, as the parachain offering comes and some of these other protocol layer solutions catch a bid, Cosmos catches a bid. So I believe Adam probably sees $30. Okay. Theta. Sony just signed on as a validator for Theta. So for those of you that are curious, like, hey, what's going on, man? Well, that's kind of cool. That's kind of good news. And they're up 14% on the day because of it. They're up 23% on the week, 91% on the month, 27, almost 2,800% on the year. They're right there neck and neck with Cardano as having performed very effing well. There you go. Okay. Price predictions. I don't know. It's not on the blue piece of paper. I don't have any idea what Theta's worth. I still can't figure out what the addressable market is because I don't really have a good proxy looking at YouTube. So in a sense, it's kind of that. It's kind of that BitTorrenty market, but I don't know how to value this thing. It's one of the ones that's been a conundrum to me. When T-Fuel, when the whole staking becomes more democratized and we can all stake and all that kind of stuff, I think probably Theta catches a bid. But until then, it's going to be kind of floating around on news. So we'll see. Okay. Bitcoin Candy asks, oh no, you already asked that. Clogging or spamming 8 out. No. There was what's up with the birds? Yeah, we got that. Okay, cool. We got all the questions. All right. Let's talk about the VeChain and the Neo. The VeChain was up. It's actually kind of sold off a little bit. But it's still up 655% on the year, 72 on the month, 7 on the week. It's basically flat right now. VeChain needs more than partnerships. They've got tons of partnerships. This goes back to the idea of meaningful partnerships. It's not enough just to have partnerships. Partnerships don't mean anything. They do not mean anything. Brady, what's up? You have to push liquidity. You have to show me deals are being done. Tony Stark, what's up? If deals aren't being done, it doesn't matter. It matters not. Acer, what's going on? McNabb, what's up? Glacier, what's up? So, ooh, look at all these partnerships I have. So what? Push volume, push traffic, push liquidity, push utility, use utility adoption. Otherwise, I ain't trying to hear it. So right now, VeChain, if it got to 5 cents and I quit buying for a few days. If it's I keep buying, I buy $3 a day of VeChain, no matter what, until it gets over a nickel. And once it gets over a nickel, in my opinion, that's kind of like price discovery mode for me. And I'm out. I'm going to watch. I'm going to sit on the sidelines with my little stash. And yeah, so we'll see. I am starting to worry a little bit that maybe VeChain, I don't know if what VeChain is trying to do starts to blur or get murky with the NFT space as far as applying non-fungible tokens to real-world assets and intellectual property. I hope it doesn't. I hope they can make their message clear. And I hope that these partnerships amount to something, but so far they have not. So VeChain has to prove its worth, and I don't think that it's meaningfully done that. So over 5 cents, I'm on the sidelines. Up to 5 cents, I buy my $3 a day. Okay, let's talk. But I do like exposure to China, and I don't know if there's any other really good way to get exposure to China. Let's talk Neo. Neo is very similar to Ethereum, only the difference is you have Neo gas. You don't have the gas problem. So that's kind of cool. It's up a little bit. It's flat on the day. It's down a little bit on the week, but it's basically up 70% on the month, 200% on the year. It's one of the less performers. I keep it because it's a proxy for what's going on in China. However, if you want exposure to protocol layer in China, you do it through IOST. You don't do it through Neo. So that's probably the way I'm going to redirect my smart contract / layer 1 / infrastructure exposure is through IOST. So I am going to start adding to my IOST bag. And for those of you that don't know, you can get IOST not only on, I believe it's on Gate, but you can get it, for those of you that are on Binance, you can get it. We can't get it here in US because Binance is a bunch of dicks and they kicked us off. And Binance US is a dumpster fire. But you can get it on Bitrue, Bitrue. Yes. Okay. Let's talk Graph Token. Graph Token has had a pretty good little run lately. It's Coinbase Venture. It's indexing servers. It's the one thing I will say that I don't appreciate. I don't like. So recently I was staking my Graph Token on the network, and I realized that the staking pool was stealing from me. Not stealing from me, but they were stealing the rewards. They've been stealing them for about a week. Straight up stealing them. And they know that people are stuck, and most people won't notice because you're not checking every day. Well, I check every day. And the stake pool I was in was stealing. They're stealing the rewards, and they just figure at $1.79 a token, we'll just keep taking tokens. And I had enough graph token that I was getting, or supposed to get, about 40 to 50 tokens. Well, anyway, a lot. I was supposed to get a lot, and they were keeping them. So I decided I was out. The thawing off period is 28 days. You can't even redelegate to another pool. And then when you redelegate, it burns 0.5% of your tokens. So needless to say, I am done staking graph, period, full stop, end of statement. I will not stake again until they change that. And if they're not willing to change it, I will never stake graph token, period. Period. Because I'm not going to put myself in a position where these assholes can steal from me willingly. If you want to change it where you create a thawing out period, that's fine. But I should be able to redelegate without having to thaw out and wait for 28 days. So for those of you at Graph, cool token, great proposition. I love what you guys are doing, but your staking is a fucking joke, right? And the information you guys present to people that are just coming into the space about your stake pools is vague as fuck. You're letting people get jammed up because I know what I'm looking at and I'm getting fucked. What about all the people that don't know what they're looking at? What about all the people that haven't been here? You guys realize my brother was mining in the summer of 2010 Bitcoin? He had 3 rigs bringing in about 3 to 5 Bitcoin a day. I know what the fuck I'm looking at. And you know what? I have my partner Leroy, who's the other smartest human on the fucking planet. And he knows what the fuck he's looking at. We collectively know what the fuck we're looking at. And I got burned. So what about all the people that don't know what they're looking at? That are just trusting that you guys got it all figured out. So affectionately, to those of you at Graph that have set up the whole staking, fuck you. There. Okay, cool. There's my rant for everybody that wanted to rant. You got it. Okay. But I do like the token. I do like the platform. It's just that the staking, they have some things they need to work out. They know this. I went in the community little chat thing yesterday. I'm not the only one that's pissed off. There's a lot of people that are pissed off, and they need to find a way to penalize these stake pools that pull shenanigans. Okay. Once they do that, they probably clean things up. I guess I just got used to dealing with Cardano, where Charles and the rest of the team at IOHK and IOG are actually decent human beings and they care about the community. It's crazy that I assumed that spread out to other parts of the ecosystem. Wrong. Okay. P. Kelly says, Hedera Hashcraft is doing the same thing as VeChain, and I'm sure they're not the only ones. Just saying that will be that change. Yeah. This is true. You know, VeChain is not the only one in that space, but they're probably the only one with the thumbs up in China. So that's why I would say that VeChain is a little bit different in that they have kind of the red stamp of approval. And so, yeah, I think it's important that you consider that. But yes, you're absolutely right, P. Kelly. There is a lot of competition. The problem with Hedera is a permission system. It's not open source. Hedera's got some row to hoe. Is it row to hoe? That's not what it sounds worse than I'm saying it, but it's like when you have a tool and you're like, you have to make the row and you put the seeds. It's like a farming thing. You guys know what I'm saying. Anyway, off we go. Price prediction on VeChain. If it doesn't get out of its own way, I don't see how it moves much over about 10 cents. So my price prediction for VeChain, off my little blue piece of paper from a downtown LA urinal, is 10 cents by June. I know it's not staggering. It's probably not going to make anyone rich unless you bought it at less than a penny, and then a 10x is pretty good. It's still currently performing, 8 times better than XRP. Oh, that was wrong. That was so wrong. Okay. Let's talk IOST. I don't know how you predict the price. Tons of partnerships. Definitely has the thumb of approval in China. I mean, and they even seem to have meaningful partnerships. But again, we need to see volume. We need to see volume. We need to see volume. We need to see liquidity. We need to see use, utility, and adoption. Right now, we're seeing adoption. A lot of adoption, a lot of partnerships, but not clear use and utility. But it is, I believe it is coming. So we'll see. I don't have a price prediction for IOST. I haven't been following it long enough to wrap my head around the addressable market, but it's China. It's kind of competing with NEO. They do have a lot of what seem to be meaningful partnerships, but as we know, partnerships don't mean anything. Okay. So I have no price prediction for that one, unfortunately. Near token. Near is interesting to me. Coinbase Ventures, A16Z, a lot of big names. Oh, also IOST, I believe Sequoia is on board there. Interesting. Anyway, Near token. Near is a layer 1. I think most people are sleeping. They're not seeing it. I think it's probably, in my opinion, it's priced correctly, but way undervalued. I think this is a $20 or $30 token. I think it's going to look a lot like Polkadot when they meaningfully make their argument. And I think as Coinbase goes out and talks to the world about their listing, their direct listing, then I believe they're going to spotlight and highlight some of their other assets. So any of the assets that they're invested in, my guess is those get a big spotlight. So this is probably a $30 or $40 token, in my opinion. It's one of the best buys. Also, the staking in the Near protocol, it's actually really cool, very elegant, very easy. There's no dickishness. You pick your pool. If it's not good, you switch pools. Not quite as clean and elegant as Cardano, but who is, right? Okay, so that's that. There was one article I wanted to cover really quickly. We talked about it yesterday, but I didn't get time. Bitcoin with Grayscale's premium dropping. Is this the right time to invest? It's very interesting. The Grayscale premium has flipped. It's now cheaper to buy Bitcoin by proxy through Grayscale than to buy Bitcoin. Kind of weird, right? So Bitcoin's biggest fund, Grayscale GBTC, is trading at a discount for the third time. It is the largest discount so far. It started off with less than 0.25 or 25 basis point discount following Bitcoin's dip from the latest all-time high of 58,330. Analysts on crypto, well, this is the problem. No one cares about crypto Twitter. But analysts on crypto Twitter have suggested there may be further price drops before the price is back on track for 268,000. Currently, the asset is trading at 44,698 based on data from CoinMarketCap. BTC is currently trading at about 6% below the previous day's price. Now, this is a few days old. 20.78% below last week's price. Currently, GBTC is trading at nearly a nearly 3% discount. And a discount of this magnitude with a premium is a buy signal for contrarians. The last two times that there were discounts in GBTC, there was a 2x and a 4x rally, respectively. That's the part I kind of wanted to get to. That's really the only part that I think is interesting. The last two times there were discounts in GBTC, and that's discounts from the regular market. There was a 2x and a 4x rally, respectively, in the following months. What is the following months? March, April. Well, that's good if you're thinking that we were, that March is going to be, dog sauce. No, might have a pretty good month. So some of these indicators are important. Most of them are not, but some of them are. It's anticipated that the same may play out this time around. However, post further corrections in the short term. Let's see. I'll leave the chart there so you guys can see it. Woo, look at this little cool squiggly chart. The above chart shows the net asset value premium or discount on GBTC. And the critical question here is it possible that history may repeat itself? Okay, I'm not going to go into the details. You know what happens. The last time GBTC traded at a discount, Bitcoin over the next 2 months managed a 2x or a 4x. So if we go back to the price and we are at 47,692, that would put us at about 95,000 and change. Or 175 to say 195,000. I mean, is that possible over the next few months? Anything's possible. And when you're talking about these big numbers, sometimes it's crazy. But if you take a bunch of decimals off and you think it's 47 bucks, could it go to 94 bucks? Sure. Could it go to 190, 188 bucks? Sure. That wouldn't be crazy. Look at some of these other tokens and how fast they move when a little bit of excitement gets behind them. You can't discount any of these moves. You also can't discount the moves downward, except to say that there's a fair amount of institutional buying, a kind of a bid, an invisible bid in the market, where there's a lot of institutions looking at putting on some of that uncorrelated exposure. And when I say uncorrelated exposure, I mean that it's assumed, at least for now, that owning Bitcoin on your balance sheet is uncorrelated to the greater equity and bond markets and money markets. That said, the more that there is a migration of Bitcoin from these relatively illiquid exchanges and from the miners into the hands of asset managers who then park that in an illiquid status, and it becomes part of the corporate balance sheet, the more it will be correlated to the greater markets. Why? Because everybody else operates one quarter at a time. Whether you're a hedge fund, a pension, whether this is a treasury function and you're a company like Tesla or anybody else, you're only as good as your last quarter. And so I believe that Bitcoin will become marginally more correlated. I don't mean it will become correlated, but in true panic, you sell your winners to cover your losers. You sell your winners to cover your bets that were leveraged, perhaps, risk that maybe you shouldn't have taken. That's why you have that uncorrelated asset on your balance sheet. That's why people own gold. That's why people probably should have some Bitcoin, because it's uncorrelated. Mr. Wonderful of Shark Tank, apparently now he recommends that people should have 3%. Well, at least he says he's going to take on 3% exposure to Bitcoin in his balance sheet. 3%. Paul Tudor Jones said 1%. Stanley Druckenmiller somewhere in the middle. Michael Saylor, 99%. You'll probably be somewhere in the middle, but it just shows you that people with varying degrees of what you could either say intellect or ineptitude, you're probably right on both, are seeing that it makes sense to take some exposure to Bitcoin. And funny enough, Bill Gates, yeah, that one, he says, you should only invest in Bitcoin if you're rich. What do you mean, Bill? What in the fuck are you talking about? This guy, man. Only if you're rich should you gain riches from Bitcoin. If you're poor, you should just keep your head down, be really good at your job, and make sure you're not replaceable. Oh, Bill. Sniper Princess says, question, Q, any insights? What's up with Tron and Justin Sun? Is this a scam or what? Any insight? Well, everything to do with Tron and Justin Sun up to this point has been a scam. It doesn't mean he won't cure cancer, create a pill that you can take for COVID, or get us to Mars. It just means that it's not as likely. I think Justin Sun is a fun person, but he is an absolute piece of garbage when it comes to the way he markets, the way he lights money on fire, and the way he plagiarizes. Justin, if you're listening, which you're not, but if you're listening, Justin, buddy, you're a dipshit. Just go away, dude. Just flutter off. Flutter off now. Bye-bye. Go away. Let the adults play in the crypto space, and you just go do fucking TikTok videos where you fucking dance with your roommate or something. All right. Okay. Let's talk a minute, just real quick. I want to leave you guys with some thoughts about game theory. I just want to go over again, just a few of the tenets. When you're looking at any of these projects, the question, what is the problem they're trying to solve? Okay. What are they trying to solve? What is the problem? And is the solution that they're trying to solve, does it make sense? Or do you go, that doesn't seem right. If it doesn't pass the sniff test, next project. Okay. What are they trying to solve? Is it a problem that needs to be solved with crypto? So you should be asking yourself, why token? Why does this thing need a token? Can it be solved without a token? Okay. This is the only problem I have with like BAT, Basic Attention Token. Yes, it's a cool problem they're solving. It's an amazing browser. But why do they need their own token to do it? They don't. Chainlink, do they need their own token to do what they're doing? No. Could they operate and use Bitcoin or Ethereum? Yeah. Or any token? Yep. So then their token is a cash grab. So then just say your token is a cash grab. Quit fucking lying to everybody. So that's my problem with some of these projects. They don't pass the sniff test. Why is there a token? Oh, because of governance. What are you governing? We gonna all vote on which ads pop up on Brave? Get the fuck out of here. So again, cool, amazing, amazing browser, great functionality. I'm using it right now. I love it. But the token is a dumpster fire, dude. There's no real value baked into that token. Doesn't make sense. Let's see. Unfederal Reserve partnerships today confirmed with Chainlink. Listen, Chainlink has so many ridiculous partnerships, dude. Chainlink signs up for AT&T service for phone lines, and they announce that as a partnership. I'm not trying to hear it with Chainlink. That guy, Sergey, I don't know how far I can throw him, but I don't trust him as far as I can throw him. So whatever. You're in your own boat on that one. I don't mind being proved wrong. Again, I don't want any of you guys to lose money. I want everybody here to succeed, but I want you to succeed because you built a fundamental set of tools that you can use and reuse and reuse so that you can edit and audit the way you invest, right? You need a teachable, repeatable system. Otherwise, it's luck, and luck is not a fucking strategy. It's not. Lewis Coin Staking, what's up? Luck is not a strategy. I got lucky. Okay, cool. Go repeat that. Oh, I got dragged out of the casino at 3 a.m. broke. Yeah, you fucking dummy, because luck is not a strategy. Putting it all on black is not a strategy. Not at least not a repeatable one. Right? So just be very careful. What do I think about Reef? I don't know enough about Reef, Sniper Princess. It is something I want to look into because someone else asked me about that, but I don't know enough to I don't want to talk about something I don't know. Okay. Let's talk about when it passes the this solves a problem question, and when it passes the why token question and you have a meaningful answer, okay, then I want you to dig deeper. The team, the tech, the tokenomics, the timing, the technology. Okay, the team, do you trust these dudes? Cardano, yes. Ripple, at least not Garlic Mouth or Chris Larceny, but everybody else, I kind of do trust the people at Ripple. I know you guys find that hard to believe. I trust the team at Ripple minus the cancer. I actually trust that team. They built a good thing. I want Ripple to succeed because it helps the whole space. I want XRP to succeed. I want XLM to succeed. It makes the space better. I just want them to get rid of the fucking scammers. Okay? So, do you trust the team? Okay? The tech. Is it real tech, or is this just something that's slapped together and you just look at the white paper and go, oh, gross. Example, Flare. They are the worst Johnny-come-lately bullshit platform. If you take a dump in a box and decentralize it, they'll wrap a token around it. 100%. Anytime they are the Tron of DeFi. 100%. The only reason Flare is not wrapping Tron is because it would explode in some, cataclysmic event that would unwind the whole fucking universe. They're so garbage. Okay. The tokenomics. When you're looking at the tokenomics, make sure there's not a quadrillion tokens and there's an infinite supply. At least look and try to convince yourself, if you can, that somebody with some understanding of monetary and fiscal policy looked at the supply and created a system that even if it can expand, that there's also a mechanism that it can contract, right? I'm not saying that all currencies have to have a cap supply. I don't personally believe that. I don't know if you can manage economies of scale with any kind of platform where the currency can't expand and contract. It's just that politicians are not big on the contraction part. You get elected on expansion. You get elected on free money, even though there's no real free money. There's no such thing as a free lunch, right? Then they say the best things in life are free. So by the transitive property, lunch can never be the best thing in life, right? Because the best things in life are free. There's no such thing as a free lunch. Therefore, yeah, got it. Okay. The timing. Is this an idea that probably worked a few years ago, but maybe not now? And this is the problem I have with both XRP and XLM. Bridge assets, transacting value through a third currency. Is this a right now problem? That's where there's a hiccup. That's where I go, oof, and I back off. For those of you that were hearing me kind of talk about XLM yesterday, I unloaded my XLM yesterday. Except for a tiny stash, I am to the sidelines. I think I can't make the argument to myself that I should own XLM anymore. There you go. Okay. The technology. This is different than the tech. The technology is where are they launching? How are they launching? And is there some kind of governance model? So I probably should say technology/governance. You don't want a platform that's controlled by 6 people where you don't have any say in the evolution of the token. So I do think you want to look at that. Remember, when you look at these projects, if you go under a microscope, there's 3 categories you want to look at. And maybe this is a good way to do it. Maybe I should change this little banner. When you look at a project really close and you're okay with the team and you're okay with the tech and essentially the tokenomics and you trust all these things, why token it passed the litmus? When you look closely, and I got this from Charles Hoskinson, look at the value proposition, the way they achieve identity in the people in the network, and the governance. It's going to have some degree of those qualities: value, identity, governance. Okay. And it may be heavier on one and less on the other, and that's fine. Each of these tokens do different things, but you should be asking yourself the question. Okay. Let's talk economics really quickly. I'm going to make this quick. We'll be done in 2 minutes. Focus on the long run and all the groups involved. 2, economics can be subjected to vested interests. It's not always clear cut. It's not always obvious. 3, long run effects are more complicated than short run effects. Why? It's a bunch of particle interactions all bouncing around in a big cloud. And it's not always so easy to see. That's why you can't predict the weather. There's so many particle interactions that weather predictability fails after about 5 to 7 days. It is impossible. It is currently impossible. Who knows? We get some AI. We seed the clouds with robots. Who knows? Maybe the future looks a lot different. But right now, you can only predict the weather out a little bit because of all the particle interactions. So the long run effects, which are all these little particle interactions, are obviously more complicated than what happens right in front of you, right? Seen and unseen, right? Intended, unintended consequences. Well, I can do my fingers. Intended, let's see if she's, wait. We got it. Intended, unintended. Oh my God, that was a moment. If you guys just saw it, that was a moment. You're welcome. Okay, let's talk critical thinking. These are the skills that everybody should have. If you're over the age of goddamn 6, you need to be teaching your kids. You need to be teaching your parents if they act like kids. And your creepy uncle, Steve, that no one should sit on his lap during Christmas. Okay? No, he doesn't have keys in his pocket. All right. That's gross. Okay, critical thinking skills. Analysis. 2, communication. 3, open-mindedness. It's okay to be wrong. If you're proven wrong, don't fight it. Just be like, oh, okay, cool. I'm wrong. I'm out. Switch, pivot. It's okay. That's how you turn a losing position into a winning position. It's okay to pivot. Do your analysis. Communicate. Be open-minded. Think about problem solving rather than just looking to other people to solve problems for you. You need to be problem solving. You guys need to be choosing these tokens. Not me, not some fucking rando on Clubhouse or some dickhead in the coffee shop or some self-proclaimed six-figure trader and these other bullshit fucking monikers that all these people on YouTube have. You need to do your own research. You have no one to blame, and you should not want to blame anybody. You should want to take full responsibility for your decisions, and you should want to win on your own. Fuck everyone else. You should want to win on your own. You know what? I don't have to tell anybody thank you. Hey, thanks, man. Thanks for my success. Fuck you. I did it myself. You need to do it yourself. You shouldn't owe anyone. People tell you got lucky. Fuck you. I didn't get lucky. I rolled up my sleeves. I was a critical thinker. I did the homework. I then invested my currency units based on my critical thinking skills. And yeah, I was here to the game early. You know why? Because the other person wasn't. Oh, fucking well. I win. Fuck you. Don't ever apologize for winning. I mean, you probably don't want to tell a lot of people you're winning because then you'll be the target of their ire and frustration. But you should never have to apologize. And if anyone tells you you got lucky, just headbutt them in the face, burn off. They will definitely sue you if you headbutt them in the face, though. So just know that. Okay, game theory. The study of mathematical models of strategic interaction between rational decision makers. That's the key, right? Rational decision makers. One might argue that there's not a lot of rational decision making going on in the crypto space. It's probably not a bad argument. One might also argue there's not a lot of rational behavior going on in the greater equity space. Everybody's YOLOing in. That's true. But you only have the tools in front of you. Game theory is the study of mathematical models of strategic interaction between rational decision makers. It has applications in all fields of social science, as well as in logic, computer science, and economics. Yes. Assumptions in game theory. In economics, there's the assumption of rationality and maximalization. It's assumed that players within a game, the game of life, the game of investing, are rational and strive to maximize their payoffs in the game. Okay? And finally, cognitive bias. The tendencies to think in certain ways that lead us to systematic deviations. That's the problem. All those weird feelings we have underneath the surface that we don't address, they cause us to have systematic deviations from a standard of rationality or sound judgment. When people are behaving irrationally, it's because the foundation from which they draw information to make conclusions is not sound. They don't have a good foundation for decision making. Certain inputs, certain bits of information are flawed, and therefore they have flawed decisions. Okay? So again, we all have these cognitive biases. They kind of determine why we make the decisions we make. Okay? Part of it is the way we were raised. Part of it is our psychology, the way we've dealt with the world, nature versus nurture. A lot of it is, at the genetic level, we have some predispositions to certain genetic traits and, hormones and things like that. So, but again, we all have these biases. We need to address them, and you need to be cognizant that they exist. So, cognitive bias, the tendencies to think in certain ways that would lead us to systematic deviations from a standard of rationality or sound judgment. Why do we make the decisions that we make? And you are the only one that can answer this. And you are the only one that can be honest about this. Okay? There's this old man that I hate. He is a mean old man. He goes to the coffee shop. He is a piece of something that's not good that a dog leaves after he takes a dump. And I really, this guy grinds my gears. He's such a dick. He goes to Starbucks and gets coffee and then comes over to our coffee shop and sits down and then basically harasses people as they walk by. Total dick move. But I realize that I've just formed this judgment of him that I don't like the guy. Instead, and this is part of our own personal journey, our own personal progress. Instead, I am deciding that I'm going to be curious rather than judgmental. I'm going to be curious about how this guy got to this point. I'm going to be curious about why he's such a piece of shit. I'm going to be curious about why I think he's a piece of shit, although he's a piece of shit. But I can't be so quick to be judgment. We all of us have these things we have to work on. I have had a lot of success in investing, but by no means do I have it figured out. None of us do. It's a constant journey. So with that, I will leave you for the day. We're going to get it started over here. If there's anybody left over here on Clubhouse after my rambling and droning. And for those of you that are on Clubhouse, if you need to get an invite to Clubhouse, you can hit me up at, let me throw the banner out there. Send me an email. I need your name, your email, and your phone number. I have to add it as a contact, cryptoandcoffeelive@gmail.com. And I'll send you, I think I have 5 invites or something like that. Anyway, there. So we're going to get the party started. So Alexander and Antonio, if you would, my good friends, please get the room going. And I will be right there. I'm going to go ahead and finish off this show. For those of you on Twitter, Twitch, Theta, YouTube, Periscope, Facebook, thank you so much for hanging out. Don't do anything my poor insolvent, drunk, skunked out on bong water grandmother wouldn't do. And yeah, she's got this new bowl and it looks like a giant glass phallus. She's really into it. Pew pew.